China is in the headlines once again as its trade surplus jumps 40%, with imports plummeting. Looking at this and more coming out of China, I'm joined by Daili Wang, senior economist with Roubini Global Economics. So Daili, in trade data out today, we are starting to see the ripple effects from the country's slowdown into other economies, with a sharp drop in the value of both imports and exports. What kind of impact can we expect this to have on the global economy?
I think the widely held view that the China growth slowdown is a bit overblown to me. Looking at the trade data, for instance, if you're looking at the trade data by value, we noted that the export growth declined by 5.5% and the import growth declined by 13.8%. However, if you're looking at the volume data, which is less distorted by the change in the export and the import prices, it's much better than that. So for the export volume, it declined by 3%, and for the import, it only declined by 2.8%. So this is one misconception in the market that only looks at the value rather than the volume. Certainly, we think that China's export growth will pick up in the second half of this year. We built up a new index that could better predict China's export growth rate, because the widely used year-on-year growth rate may be distorted by a base effect, and our indicator proved to have a very high correlation between the index and this YOY growth rate. So based on this indicator, we find China's growth rate, the export growth rate, will likely reverse to positive in September. And in fact, it has predicted this increase in slower contraction in the export growth rate in August. Because in August, we saw this export growth contracted by -5%, and in July, it contracted even more by 10%.
Looking to Thursday and inflation rate data out, what could we expect to see from these upcoming figures?
So we are about to see inflation, industrial production, and all other economic activity data in the next few days. And I think this is the most important data that merit our attention is not inflation, but rather industrial production and investment. So about the industrial production, this is important because it has a large bearing on the industrial profits, and the industrial profits again, it's important to determine whether there will be a corporate bankruptcy, massive corporate bankruptcy, whether this will destabilize the economy or not. And about the investment, because China today is still, China's economic growth is still highly correlated with the investment growth. So we would like to see whether previous stabilizing measures such as infrastructure investment or real estate investment have bottomed out or pick up steam. If we do see there's an improvement in investment growth and industrial production growth, that could actually corroborate my point just made that the fear of China growth slowdown is overstated.
Uncertainty over China's outlook has no doubt increased market volatility. Is a change to their economic policy on the cards?
I think the Chinese policymakers, they don't want to change the policy, especially the foreign exchange rate, because last month, on August 11th, they have liberalized the reference rate, and that has caused this financial market turmoil all over the world. And we should know that 2 months from today, China will have its SDR talk with IMF, which is, the most important task in the second half of this year. And before this important meeting, China does not want to do not want to leave an impression to the world that the country is not responsible for the global financial market. So I don't think they were likely to change their foreign exchange rate policy. What is more likely is they might step up fiscal stimulus, or they might want to cut the required reserve ratio to inject some liquidity into the market. This will likely stabilize the growth from slowing down too fast. And as I just said, there's a very small chance of China growth path. But however, this cannot last forever, and it will likely mean a bumpy landing in the next year.
Well, that's all from Daili and myself for now. Thanks for tuning in, and for more market analysis like this, remember to keep clicking back.